Vamos lá, fecha um carro.
Hello.
Good morning, good morning.
Morning, good morning. Okay, I am a little bit half baked. Bear with me a second while I get some liquid gold. In the meantime, feel free to appreciate the analysis from yesterday and today, from yesterday and the day before, or analysis since Monday, rather. And if you have any questions, now's a good time to get them out. Or
Hi, Kate.
what's up?
All good, all good.
Oh, that's
I'm in a
tomorrow.
short. I'm in a short.
I am going to be selling.
No, I am in a short, but I ask myself when it starts to fall down.
All good, all good. Uh, I'll take a look in a second, but I don't. I think. Wait, no, let's not overthink it. Processes predict. So this is the end of our first week of me trying to get an idea across about what you do based on what day of the week it is, and essentially what information is more important. So we can see where we started. We can see what's happened since then. I'll hide the volume profile indicator for a second, so you get a better appreciation of what last week's range was like. Only Friday's range is being outlined here. You can see how we traded up, the anticipation for downside. We can see how we overshot that anticipation by a landslide. Got all the way down here. Reasonable, not expected, but reasonable still. And then the pullback. So now we can get an appreciation for, at this point in time, we have a couple things here. I might want to take off some of these things today. This path might not have been the smoothest, but we can see the same structure, sweep, breaker structure, pullback, rally. So redundant to keep it on. We don't need that anymore. We passed that. This is still a little bit salient, in my opinion, partly because this is the day that swept liquidity, and then we traded above it here. We haven't really shown much aggression. So in my humble opinion, first thing I should have on is today's open. Probably code something to get some vertical lines over the weekend. Then I want to see what the open price is like. Where are we in relation to all of that? Then we can see the AM session down here. So a little bit of the what do you call this again? Relatively equal highs here. So while I'm expecting a push to the downside, it is not weird to see them run this again, sweep that high, or make an attempt to get back up into equilibrium of this range. All right, if they're going to leave the high, equilibrium of the range comes into play. So that means one second. That means if we grab a box and we go, brightness just dropped. Where is it? There we go. We lock in this range. This is overnight as well. So let's say we lock in this range. Then in New York session, for a pullback, the minimum objective would have been EQ of that range. There we go. So now we can see the sell side. Sell side has been swept. We're retracing to equilibrium. Now, if it is going to make any attempt to get to that open, then this guy should not act as any kind of resistance. And if we are going to get moves to the downside, liquidity ran breakaway gaps down here. Something about this, I don't like this wick, but I'm going to use it for the sake of being disciplined. I prefer using this wick. This wick makes more sense to me. But I'll put that on just for the sake of not breaking any rules. So right now, yeah, bearish. Buy side, previous day's high and die. We want to see everything here push this guy low. This, I believe, was the liquidity from yesterday. So I'm looking to see something in there. And I don't know what else to talk about as it relates to this. So let's move on. I'll come back and put the volume profile on and just take a better look in a second. So same thing here again. Open of the day. Thursday 5 p.m. Open price. Let the analysis analyze itself. So again, we can see tight range inside here. Little bit of a wick up here, somewhere toward the end of that range. So I am choosing to not include this wick, okay? Because of this structure, we have open and we go down and we print a high, and then we have one last push up and then it dies. I'm choosing to not include that wick and do this instead. So that being said, we would have low. This is where you want your FVGs to print. At this low, after it's taken here, this is where you want your FVGs to be printing to send this low. I am noticing, we didn't hit EQ of that range. So if the up candles here or the low here starts allowing price to push through, then I am not opposed to a little bit of a pullback before gold gets to here. This is the FEG prior to the breakout that we would reasonably want to see some kind of reaction, or not necessarily support, but show us if it's not going to go lower, then this will hold. And if it is going to go lower, then this will give way. This is a nested FEG fractal, FEG inside a FEG inside a FEG. I'm going to take this one off since I've already gone through it. We've come back above it and then all that, and then this is more refined, so less noise. Still think this is possible, but it needs to break here first. This is now redundant and unnecessary. This, wait a minute, let's just check something. Okay, so what I was checking is, this is the day that open swept lows came back above. So this is like a manipulation. So whilst we're above this, then the overarching view should be bullish, which is why the target here is not this low all the way down here. It's more of a pullback. Then it shows me what it wants to do here, and then we either resume bullish or not. Gold, on the other hand, is already at that price. The day that opened and swept liquidity, then pushed up, grabbed internal liquidity, we are pretty much at that price. So that begs the question, is gold heavy or is it consolidating today? That's the most logical question here. If I had to
I'm just getting in. I didn't get to hear what you said about Nasdaq. Are you bullish on Nasdaq right now?
No, but I want to see it pull back because there's liquidity there, at least to 50%. Even though we've tapped it before, I'm really going to be looking as we get in the equities open if this can act as resistance. If this acts as resistance, then we want to see it lower. But if equities open is pushing through, I'm going to allow for at least 50%. And if it's above it, I'm going to open my mind to the potential that it wants to come here, and then I sell.
Okay. Okay, I'm actually expecting just longs at equity open, to be honest. I'm already long at 18, 818 on
One
EQ.
second. Let me just check something. What is this? 4 a.m. low. Yeah, I'm not buying yet. I see both of them sweep that low. But let's see. So, again, comparative analysis. Both of these have a wick down at 4 a.m. Both of these have a manipulation open. Gold is already below it. So with the FEG here and this liquidity pool sitting there, at the back of my mind, if this FEG holds, right? I don't think I need to say this, but on the off chance that somebody does not understand FEGs, anytime I draw FEG on a chart, if I have, let me just move it. Let's just put this line on first, and then I'll talk. Let's say gold. Yeah. So you remember at the start of the week, I had a FEG here on gold. I think this was the one. And my expectation was that it was going to pop back down in the FEG and rally. You should remember that at least. In instances where the key level, whether it's a higher or lower FEG, is clearly outlined like this, and the expectation is reject. If it breaks with a close, then it goes without saying that the analysis is invalid. It goes with further saying that if it breaks and close and then it closes back above, then the analysis is back on the table. Okay. So I might not be around, on a call or online even to point that out. But you as the trader or analyst should be okay with that. So this is the expectation from yesterday. With all that drop down, all this discount stuff, a drop back into this leg here makes sense. With this FEG sitting at the high, it's pivotal. Pivotal in the sense that it can turn to one direction there. So if right there it sweeps that low and then rallies, then that's clearly bullish. If we're breaking that, then here. Right? So with the expectation that NASDAQ should want to reach here, I am of two minds right now. Unsound mind. I want to see if NASDAQ can get the EQ and reject. If it rejects, then I'm selling and targeting this. At the same time, I want to see gold hit that level and show me what gold wants to do. Lately, both of these pairs have been positively correlated. NAS is going up, gold is going up. NAS is going down, gold is going down. The only difference is they reach for their own respective levels. So what happens a lot, and you're witness to this one of these days, if they're both going higher and the objective for one has been met, the other one consolidates. Like the day when I bought gold for a pullback, but gold hit, I think, EQ of the range or the low end of the range and just consolidated and then dropped. But NASDAQ actually went higher to the open and then dropped. So low just got tagged. I am anticipating that they'd want to rally here. But again, because this is the pivotal FEG where this is where I want to make my decision, I don't want to commit as yet. So for NASDAQ, near-term liquidity, key levels are up here, not liquidity. Liquidity is only above this. Key levels are here, liquidity is here. NASDAQ has a much further way to go. I feel like this should be the better sell, but gold is pushing through the level already. So now that gold is at EQ, we need lower time frames. Cricket. I need to take something off this chart. All the analysis. You've already done your own homework in looking at that part, so I don't need to do that. So let's go full screen. I'm gonna clear everything. I'm gonna pop to the M30. I'm gonna grab the FEG. I'm gonna go right back to the M5. Need to make me an indicator that does this. FEGs and nested FEGs. Was there an FEG on NASDAQ? I don't recall. So I'm just gonna put the open up price on. I feel like I can fade gold for a buy, but it should be very risky. And here comes equities open. And a 1, and a 2, and a... We don't know. All right, let's go.
There's equal lows on NASDAQ too, right below EQ.
Right below EQ, EQ off.
NASDAQ.
EQ off NASDAQ. Huh.
That's the one there. Right?
One sec. I don't remember where the NASDAQ FEG is. Oh, there's no FEG for NASDAQ, just the lows. So NASDAQ liquidity. So anticipating NASDAQ to push up and then gold to follow suit. I think this is the range. Oh, this is an M10. My bad. M5. Through the fire and the snow. Oh, oh, oh. Voices of the north. NASDAQ pulling up the EQ. Gold rejecting EQ. All right, now that NASDAQ has touched EQ and gold is at EQ, let's see some explosiveness. So one of two things should happen here. Gold gets animated or gold rejects EQ. Gold is above the EQ. Yeah, what he said. Let me go ahead and get everybody muted. All right, that was a beautiful gold buy. So the fact that gold is pushing means I'm anticipating NASDAQ to continue and not stop at EQ. But that's good enough for gold, for me. Allow it to pull back. NASDAQ now, again, we're either going to reject that or get here. But I'm leaning on them wanting to do something on the upside. I close my gold because if I'm expecting gold to pull back, it pulled back above the FEG. It didn't close, we don't have enough time for that. And NASDAQ is at its EQ. I need to make a decision. That decision is going to be what happens next. I really want to sell NASDAQ though. I really want to sell NASDAQ right at that high. And that would keep gold heavy. I don't remember where gold's next downside target was.
See, for NQ, I'm aiming for those that H1 expansion high.
Oh yeah. So, oh yeah,
6 p.m. highs.
I forgot.
So that's why I was expecting it to just continue. Right,
right,
we're
so
in that FBG right there.
Yeah, this is what I was saying. So for Nasdaq on a 30-minute chart, I would expect them to wick but not close above here. That would justify running the liquidity and
As he
the
get back.
FEG. So watch this. See this FEG? We want Nasdaq to push up, wick these, and then close below that FEG.
Mhm.
It's already deep in premium of the range. So I'm not looking for strong closes up here. So if this is enough to not get the high, because we did it, like I said, we opened with that high, then it's going to stop here. There's too many things that it can do, but whatever it does, we can read it. So I'm not too concerned about what's happening now. You know, we already anticipated that Open could do this. I'm not really concerned about that. This is what I'm looking at. The fact that this is the pivotal point. This is where we get confirmation if gold is gonna go higher or not. Gold going higher means closing above the FEG EQ here. Vice versa. Nasdaq going lower means retraces to what it needs to get to here and then continue low. There we go. Forgot what I was saying. Paying attention to that FEG. So I'm getting ready to sell Nasdaq. Let's put that M30 FEG on Nasdaq. I'm getting ready to fade the high, rather.
My stops at break even. Well, I'm in like 20 points profit.
You're
I'm
long?
gonna put my stops at, yeah, it's long from like 818. But I'm gonna put my stops once this
How is
M1
this
kind
20
of
point?
closes above that.
How is this 20-point profit?
It's not 20-point profit. I'm up about 57 right now.
Oh no, you said
57,
20. You
58.
said 20, my bad. Or maybe it's
That's why I
I.
was gonna put it in profit to 20 points, but what I'm
Right.
gonna do right now is put my stops below this M1 candle. If it expands above the high.
It's 6 p.m.
What?
It's failing.
We talked
I
about
don't
that.
like that.
We're not surprised. The FEG is there. Expansions protect FEG. So I'm not expecting the M30 to close above this FEG. That's what I'm saying. Even if it takes the high, I'd still expect them to close there. And even the M5 is not closing there. Does that justify an early sell? I hear just continue selling gold. I missed the gold short, so Nasdaq it is.
Nah, I'm about to long this again, bro. I'm not gonna lie to you. But I'm chilling, I'm holding my position. Oh my God, look at that. God damn. All right, watch this. Let me see what.
Don't worry.
This is about to, I'm about to take some off because that hit something I don't really like. So I'll get that
I
right there.
think this is not a manipulation, Kish. This is continuation. This guy wants higher. I close my short now.
Okay.
Yeah, I closed my lungs just now as well because I got enough, to be honest with you.
That is okay. As for me and my house. Let me just confirm something real quickly. Nope. Short. I'm too short. So, my hypothesis is this high is not going to get taken again. That's my hypothesis. This is just going to reach for that 4M low now. First thing, what time is it? It's 8:38. So when this candle closes, I'm expecting the next M5 candle to tap EQ again and then die. If that happens, then I'll load up aggressively. But this high, don't take that high again. Calling me home, to the fire and the snow. Oh, voices of the north. Let the cold wind blow. Shadows in the night. Sorry, that's a song I came across via TikTok and I just loved it. Let's pull this arrow down a little bit more. Whoopsie. 30 seconds. So pull back now, or better yet, close below the FEG to cement narrative, and then pop back above the FEG. And that should get me scaling in. But I'm already in. I'm already in right up here. Show no weakness. Show no weaknesses. Sentient NQ. Oh, clean. All right, so I need this for more shorts. I need this to pop above the open. If it's just open and going low, then that's no bueno. That is no bueno. And in that case, I will find the equities open low. So this is the open there. This is the low. And I will start scaling out in all right, so I have 3 positions in. I'm taking 2 off right here. There we go. And if it comes back above that low, I'm taking the other one off. There, well, off we go. And if it goes below it again, I buy. The manipulation should take this higher. You can't be wanting lower prices and manipulation goes lower. That doesn't make any sense. So I'm looking for this to go back up now. Fire with the snow. Voices of the north. Let the cold wind blow.
Friday madness.
Sorry?
Friday madness.
Why this madness? It's not that
Friday.
mad. Oh, Friday. It's not that crazy, to be fair. You know, it's I'm not trying to sound like cool or anything like that, but these are normal templates. These are normal manipulation templates. I think the only thing I did wrong here is I should have just closed. Let's see the M1. I didn't look at M1. Yeah, I wouldn't have bought M1 either way. Unless I close and just entered again. At the FEG low, I wouldn't have bought. But this is that M30 FEG and we're just sitting inside it. Not FEG. What am I talking about? I'm sorry. The low. Call it Asia low then. I missed the long and I'm out my gold long. If gold rallies, I'm going to cry. But if gold is rallying, then that's the low. And then the EQ of the range is going to sit. Again, I'm choosing to put the EQ here because of that last spike. there. So if we go to gold M5 and we look at the equities open range or whatever they call it, irrelevant either way, we have low. This is pushing. Gold is bullish. And gold is reaching for, no idea at the moment, but give me a second. Oh, gold is reaching high. Maybe up here. I cut my short. I was long right down here. My. Anyway, it doesn't matter. What's important right now is that this M5 is manipulation because NASDAQ has underlying liquidity on both sides, meaning here and here. I want to see if this candle closes bullish or bearish. Then I want to use its open as a crutch. So instinctively, if it closes bearish, I'm afraid of touching it. If it closes bullish, though, then trading becomes easier. We are reborn. Yeah, it's going to be difficult to trade this because I'd want to buy down here. Is the risk worth taking? And it's gone.
To me, it's like there's too much things that can happen right now. So I just take my one and just walk away. Because
Like what?
right now, I think like we could be short right now. I really think that we could really still be short right now. But again, beforehand I was long, right? And anytime when that happens to me, when I'm like, yeah, I can see both sides really and really happening here. I don't want to be a part of that.
I like
just
that.
don't want to be a part of that.
I like that. So I want you to listen to what I'm about to say, okay? If these two red lines represent range high and range low, this is a sweep of sell side liquidity. When this candle closes, we have a sell side liquidity sweep. So for all intents and purposes, buy side would be here. If we are heavy, this will not get past right here. Which is why before this dropped, I was anticipating this to open, reach up into here, and then fall down. So right now, if I was going to take a risky sell, it would be right there, right now, bam, like that. Not taking it, just saying. The expectation would be that that pullback would be the first step of this drop. That didn't happen. The manipulation template changed. The manipulation template went lower. And one thing we know is if the manipulation is lower, then the true move or the real move is higher. Which is why I was toying with buying below this candle's open. Now that it's like this, my first instinct is that this is just a change in a state of delivery. That's not the trade I want to chase. So my gut still says short this for back to the order block move and then a rally. I don't like that. I can see the trade, I can frame the risk. I don't like this setup itself. It's more me wanting that to play out than me having high conviction.
Yeah, and that's exactly what I'm talking about. Like, there's a difference between high conviction where you just know that, all right, this is the direction that I want to see going, versus like, all right, I can see, I can analyze it, and I know that I have a high percentage of it going that direction or that direction, but I just don't know which direction it is. Like right now, I'm just 50-50, like seriously 50-50. You know what I mean?
Same. Same, same, same. So I'm comfortable thinking out loud and saying that because when you spend a whole lot of time with charts and candles and drawings, there's an order to things. So for here, for me, the order is open. So I shorted this. Once I short this and we close below that FEGEQ, the next thing in normalcy would be to open, rally, die. Because we're trying to capitalize on the move down. We're not trying to capitalize on the move higher into this. So the fact that this continued, it means the move we wanted happened way before, I want to say way before the setup, way before it should have. But again, I don't want to impose that says it should do whatever I want. This changes the order to what I like to trade. The mere fact that this dropped and it didn't do that, it's like, let me draw this. Think about it like this. Range is created, right? Next thing you want is a break outside, false break, and then all that good stuff, blah, blah, blah. So that would be something like up, down. You want to short here. That's what I essentially wanted to do. I sold this, which is this wick, and I'm looking for this to sell again. What? Because this is the liquidity pool. What the market did was create the range, run up, we sold, then it gets down here, right? When this pulls back above the liquidity pool, if you think this is coming next, you're crazy. You're absolutely crazy. Because then, what about the guys who sold here and got all that drop from here to here? They're also looking at Fibonacci retracements inside here, OTE, all that good stuff. That's where they want to sell. I'm not selling that. I would rather, like I was saying, buy here knowing it's risky to anticipate that. Because these are both the same fractals. Range being created, falls break outside the range, run on liquidity. It's the same stuff. The only thing that changes the order, just the order. With one, the one that we love and can recognize, liquidity sweep, breaking market structure, CSD, retracement, enter short. Liquidity sweep, run to liquidity, negates the idea that you should want that altogether. Does that make sense?
Just have
So-
a quick.
It does make sense, but how do you stay? How can I say this? How do you stay convinced of what that sell side, that other side, that opposite liquidity is?
Here, like why here?
Yeah, why here and not maybe like lower? Because below that, literally below that equity open candle, you have like equal lows below it. So why not those equal lows and equity low instead?
Take a look at this for a moment.
Mm.
What do you see? Permit me to take this off without calling me hindsight Harry. What do you see when you look at that?
I'm not sure I understand what you're trying to hint at, to be honest.
Take a look at the fractal. What do you see with that fractal? This is the fade I want to short. Now that it's above that. Unless this has a higher high, then we could probably see a little bit of a pop-up. But this is what I want to sell. Does this fractal make sense to you? No, knowing that we expected liquidity to be above here, ran all that. Does this fractal make sense?
Yes, it does.
Yeah, that makes sense. That makes sense.
So we started with this, knowing liquidity is here. That's how we started the day.
Yeah.
So we were looking for rejection of EQ and then lower. But if it does not reject EQ, this is where it's going to reach for.
Yeah.
We frame two scenarios to short. We're going to short EQ or short here. We didn't get a valid short to EQ.
Yeah.
Right. So again, the fade or the short that we want should be here when this liquidity is being swept. Likewise for gold. This is the pivotal area for the liquidity. This is pullback. Why is this pullback likely to be aggressive? I faded this without CSD or anything. This is likely to happen because EQ of this range is much further away. It's the same, we're trading the same principle. This has liquidity here. The sell side was swept. We're looking for continuation shorts, but where to sell from. There's only two logical places. EQ rejection, opposing liquidity. Nothing else. Literally nothing else. In real time, we frame everything around this. We even went as far as saying, if this got swept, we'd love to see them come back and close below that FEG there. That's why we put that on. This is where we are now. If the next M5 candle gets below here, it's game over. Full stop. Game over. Gold, same thing. On the line, bearish. Gold, I don't trust gold for a short that much. I prefer this because this is the pivotal point. Not trying to sound fancy. This is just the FEG at the break that, this is where if it closes there, we're going lower. But now that we're here, I think this is what gold should reach for. And at the very least, gold should want to get to up here before it sells off. NASDAQ, we can fade NASDAQ. This is a fade on NASDAQ. We said this at the start of the call. Not trying to sound cool or right, but this is what you want. This, especially with the FEG here, you want to sell this and see them not close the M30 candle above that FEG. So let me manage my shorts.
Yeah, once it took that 6 a.m. high, I'm very interested in short. That's why I was like, I don't really want to short right now, but I've seen it. But I would rather take 6 a.m. highs first, or the 6 p.m. highs rather.
Valid.
I just did that.
No,
So
watch
right now I'm
watch the M5. Look at this is the key difference between seeing a setup, trading the setup, and then sometimes the exact same setup works, and then sometimes it fails. NASDAQ might pull back. I'm short here, but NASDAQ might pull back. I believe NASDAQ might pull back. Look at the expectation, like before the candles, right? Look at the expectation. Once this is run, you're looking for a push up and then a drop. The important thing is push up to where? If this candle went higher, push up to this and then fall. But the order changed. If the order changed, then the highs are likely to change too. So if you look at the charts and you have two logical areas that it can trade to. Scenario A, it trades to here and die. Scenario B, it trades to here and die. Scenario A is invalidated. There is no more analysis needed. It's just a waiting game at that point. It is just a waiting game at that point. Right now, this is my only thought process is this right now. There's 2 minutes left in the M30 or the hour. I want to see them close inside here so the M30 body stays below the FEG. After that, I don't care if they want to pull back. I see just in EQ, I'm shaving one position out. Without even thinking. I'm not going to hold on to the idea that it has to close. What if this is overwhelmingly bullish? What if it, wants to engineer liquidity first before it falls and sweep the high again? I'm not going to turn a clearly winning trade into a losing trade. But yeah, as of right now, we're just focused on the relationship to of the M30 and that FEG. Where are we closing in relation to that? If we close above this in the M30, my mind will say, in order to be bearish, we're going to open in the new M30, take the high, and then close below here. That's what I think about. But yeah, let us see.
Kish, you mind if I ask a question?
Always.
In regards to AMD, and you
Mhm.
might have actually already explained this before, but is there a such thing as structural AMD and timed AMD?
Yeah.
And which one would you say is stronger, or it's not a such thing as stronger? They both.
Oh, so structural AMDs are stronger if you're just trying to frame where to enter. Timed AMD are better if you're trying to justify what levels or what open prices really the market needs to close above or below to keep narrative in play. Okay? So right now, we are trading a mixture of both. You know exactly when the times are. You know exactly, well, if you know the times and you have the ranges, you know what they look like. That's a delicate mixture of both. Everything here is AMD. So now, new M30, I'm looking for them to pop up. It should want to pop up. But let's see what happens in the first half. Mm-mm. We are reborn. New M5 candle. I take this off. This is what I would want to trade here. Bam, bam, bam. All the way down to that low. That's what I want to trade. So let's see if the order changes again. What does that mean? Instead of open and going down, we open and we go higher. Simple. Let's see. Let us see if the candle. I want them to trade a high. So let me just put that out there. I
So
want a new high and then sells.
I'm just noticing something, Kish. Tell me if I'm wrong. When you say different types of orders, if the order change and that, X and Y die in a third, I guess you want a certain type of order to occur depending on where you think the draw on liquidity is.
So interesting way to put it. But when I say order, I don't mean buy or sell, right? With me with that?
Yeah, I know. You mean like the order of events of how it occurs. Yes.
Right. So usually, like this is generic. Usually, in a normal situation, you have accumulation creating the range. If it's a false break, manipulation going outside the range, and then distribution reaching for the next end of liquidity or something like that. Right? That's ABC 1, 2, 3 stuff.
Yeah.
What happens if the range is created and the manipulation holds price inside the range? What are you expecting from distribution?
To manipulate.
Too much. That's what.
Oh,
What you're expecting is too much.
all right.
So that's fine. The important thing is if you can see, because usually manipulation open is like CSD. If we open, manipulate lower, once we close above the open price, change in the state of delivery. Simple. Once you have the change in the state of delivery, then distribution becomes easy to play. No, this is where people mess up. Sometimes if you're not dialed in, even I can make this mistake too. Don't think there's anything special about it. What if manipulation is a down candle, right? This is going to be pivotal. What if manipulation is a down candle? What do you want CSD to do? Trade above the high, close above the open. Pick one.
Trade above the high.
And that's how you fail.
Tough.
Why? We just talked about it. But you're still thinking about candle structure. Let's run through that again.
They can trade above the high. You can treat the open as now marker, right?
Not necessarily. So all right. Let's go, Mr. Miyagi. Empty your minds for a second, right? Forget everything you know about CSD and order blocks and all that. Just listen to what I'm about to say, okay? 5 minutes ago, we had a conversation that said manipulation open can be treated like CSD.
Mm-hmm.
Don't remember anything but that. Manipulation open can be treated like CSD. If we open, manipulate lower, and close above the open, that's a CSD. Your underlying narrative is bullish. With me?
Correct. Yep.
Cool. So that means after we close above the manipulation open, if price drops lower, it's going into discount for higher. Yes?
Yes, sir.
Cool. So the question I asked a moment ago was, if manipulation is a down candle, do you want a trade above the high or a close above the open?
Well, that depends if the close happens on the same candle or the next candle.
Hey, you're stunting your growth, making this difficult.
I'm so sorry.
You, Kish, are you saying basically like for example, looking at this US 100 chart right here, we are kind of looking for it to go bearish right now. The 9 a.m. candle opened as a bullish candle, right?
Mm-hmm.
The M5. We want to see a close beneath the open of it to be assist, because the bullish candle would be like a manipulation in the opposite direction.
Beautiful.
Right. Yeah.
Beautiful. That's it.
And
that is it. Like way before entry strategies and confirmation print, these are the things that point to, hey, you should be paying attention to this. Once you have that, hold on a second. Once you have that underlying premise, everything price prints afterwards is experience for you. And this is what I mean. As of right now, we want a close below here and then life is good. What you will learn today in hindsight, because I don't want to predict it. I don't want to tell you what to expect or tell you what is ideal here. For, I don't know, let's say at noon today, load up your NASDAQ M5, go here, because it's 9 o'clock. So this is new UTC 5. Put a line at the open price here. See how price prints after here. Just pay attention to that. Do we close below here? If yes, what do we do next? Are we this is wicking and rejecting? Are we doing that? What do we get next? What that will do for you is show you how you jump the gun before price says you can.
That's a nice exercise. Okay, I'll do that.
Right. So if this is done properly, and then refined over time, you should learn how to trade without stop loss. And that's not a flex. That's not something to aim for. You can still trade with your stop loss, but now you can justify why certain things should not happen. If this closes below here, I will not sell the next candle. And it's going to be fun to watch if it closes there and something looks ideal, but then doesn't play out. If this closes below the open, I'm not selling the next candle, but I will be selling.
Because we didn't take the high. Is that
because
correct?
we didn't take the high.
Yeah. Makes sense.
That's it. So that means we could sit here for a while if the price action decides it's going to stay here and not take the high. And not so imagine a world, let's move these lines. Imagine a world where that high and that open price is just staying inside that for the next 20, 30 minutes.
Honestly, that would be hell. I'll be blowing.
No, look at this. Now imagine this scenario now. There's only two lines here. One, you want to see price trade above, and one, you want to see the market close below. What if we close below here and this high is not taken? What if we take this and this is not taken? Don't answer it. It's supposed to be an exercise that you think about. So here we come, pulling at the high. This, by the way, this scenario is why most persons get stopped out before it moves. When we miss this, sometimes I miss it too. Like I'm too dialed in. Imagine if this drops, this high is not taken, and we drop here and CSD this candle, like close below the open or wick below the low and close here. Wouldn't it make sense to sell and put your stop there?
Yeah, I'm seeing that.
All right.
I'm seeing that.
So then it stops you out, and then you get a better entry, and then one loss, one win, life is good. Nothing wrong with that because your win should be bigger. But what if you only have one shot left?
Like based on what you're saying, then looking at this range, of course the range it might not be that big, but if the range, like this concept also print on a larger range, like going long here and like having your stops at the low of the candle that wick the opening price, wouldn't that be like a good trade, considering that would have be like it sweeping
Yes.
liquidity and then
Correct.
aiming for
Yeah.
okay.
You remember when price was here? What I said I was going to buy if it drops below this open?
Yes.
I was doing the same thing here, but this is a little bit faster.
Okay, I see. I see. Makes sense.
Well, that also implies that you need to know at which time the market is supposed to do the manipulation, isn't it?
Well, yes and no, and I'll tell you why.
Okay.
If you are stuck to the time that the manipulation should happen, you might fade stuff that should not get faded because you're like, oh my God, I know what it should do. So I'm taking the trade, but the market doesn't confirm. But I'm taking the trade. It gets stopped out, then market moves. You're stopped at the high of the day. Market drops 2,000 points. You're like, wow, how am I 5 minutes early to a 2,000 point move? That's happened to me before. I've missed 5-6 days of drop by 2 points when I want a previous daily high to get taken, and I set my sell limit there. Even when I see the round numbers, like this is 57, like 29,757, I'll see this and put my stop at my sell limit at 29,750, and it still misses and dies for multiple days. I'm pretty sure you've seen that happen to me already. I frame a big move, I completely miss it, and it's life-changing money. Yeah, that's happened. So you can only learn from those losers, or you're destined to repeat them. But yeah, I want to sell the next M5 candle, but condition number one has not been met. This high. Somebody asked me one time, like, how trading is so hard that I have to be locked in and focus to analyze, much less live price action. How can you do this on a live call in front of so many people? Aren't you nervous? I'm not. I consider an audience just me thinking out loud. You just get to see me think out loud. That's all.
Yeah, because you really and truly already know what you're doing. It's not gonna change what you're doing, really.
Right. I'm not going to go, well, got people watching me today, so need to top tick the entry. Need to tighten the stops on everything. I need to micromanage. I mean, I'm performing for you. No, that's not happening. Rules protect. Processes predict. What I want is what my processes are going to predict. And my processes say, if that hideout don't get taken, leave it alone.
Yeah, and based on what you're saying about the processes, like they tell you what to do. So in a situation where, like, say somebody does know where the manipulation begins, like a specific time when manipulation begins, at first, I guess, yeah, there would be like taking the same trade over and over because they're trying to figure out the deliveries around the time. You know what I mean? And then once they figure out the deliveries around that specific time, they kind of can piece together what they want to see around the times to say, okay, I'm aiming for longs or I'm aiming for short based on your what liquidity pools are there. You don't think so?
No, if that was true, then everybody who was ever talked about or mentioned time theory to anybody would have made them the best traders in the world.
Yeah, true. Because everybody would do that. Oh, I get you.
There's a difference between a coach saying to a striker, hey, listen, if you're on the left side of the field and you're going to use your right foot to kick, position yourself like this. And the striker understands the dynamics and everything, and it's cool, they get it. But then you get to the chart, you get to the field, and you're on the right side. You can see the gold. You can see the goal, you can see the goalkeeper, you can see the defenders. If your execution does not take into account those things, it doesn't matter how hard you kick it, it's not going in the back of the net. What does that mean with time? I can tell you off like point blank, watch this open price right now and look for this to trade. I'm doing that right now. I'm telling you, if we don't close below this, then this short is pointless. Absolutely pointless. But
I'm not gonna lie, I'm short right now. I shorted it. I think
somewhere this.
Let me tell you the exact timing. 15. 9:15.
I wanted to sell remember when this candle was printing, I wanted to sell the very next candle. But it must do this. Now I have half a mind to buy this, as a matter of fact. Let's pop back out for a second.
As long as my stops right now are at the high of the 14 candle, 9:14. So it's about 25 points.
Good. I think this is good. This is good for so big picture, the run on liquidity has already taken place. Big picture, right? We talked about this. We talked about all of that. Big picture, shorts look good.
One question.
1 second. The minutia, the things that support this short actually being profitable, those are the things that are not there for me yet. We're not below this FEG. We're not closing below the open. We didn't grab opposing liquidity. So as beautiful as this short is, I don't have high conviction. Like I don't think I can put 2% risk on here, close my phone and walk to the kitchen and come back. That's how much faith I don't have in this setup.
I get you. You do have the framework set up to say, yeah man, I gotta trust this.
Right. So, yeah. Kamara, was that you?
Yes, I was.
Mhm.
For the shorts, aren't you concerned about the 1 hour candle, the previous 1 hour candle?
Negative. I've thrown the 1 hour out of my process altogether.
Okay. Just one question here. We have the last two highs on 1 hour. That was order blocks, and this previous 1 hour candle violated the 50% of them.
Mhm.
Would not say this guy will go to the next order block, which is at 800s.
So if I'm going to buy and target anything, it's going to be here. As of right now, the only thing that I'm interested in is this selling off to get to a liquidity pool.
That's
Price
dumpy.
is going now. Okay.
Right? Next M5. Let's speed up. Whatever is going to happen, we speed up. Hola.
You talk about the closing the open of the manipulation.
Mhm.
When we were talking, I came just to the chat. On 5 minutes, I saw that the moving higher on US 100. The order of delivery was changed when before the move higher. But I put the manipulation on 810 was the key level. The open was the key level.
Mhm.
But now I went to 1 minute. I saw that a big move higher happened on 813, but on 910 the price came back and do what you just said. This is the good way to look at it. I just want, maybe I don't know if you understand what
I don't think I fully got the question.
my question was about the open of the manipulation.
Mhm.
When we are bullish, when price go down and close above it, when it create the order of delivery of bullish, when it my English is poor. I don't know how to integrate, but
All right,
it,
that's
it is
if you
understandable.
can put it on a chart and send me, then that's fine too.
Okay.
Okay.
Thanks.
Na, 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 na. Na, 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 na. Na, na, na.
Yo, I wish I took that on my life. I'm not gonna lie, I didn't take that on my life because I'm just like, yeah, today's just a Friday. But damn, I would have paid, yo.
Na, 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 na. Why do I want to buy this? Tell me why am I going to buy this?
Lower day me a pre, you know. Kish man out to the lie. Lower day me a pre. This look like a some massive expansion low. But let's see what's gonna happen. I don't know.
I think we're going for awareness low and then buy.
Okay.
I think
Let us see, let us see, let us see. Maybe this rally is right now and it's gone again. Maybe. Na, 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 na.
Man, if I was a betting man, I'd add here, to be honest with you. And aim for the low of the day. God damn it.
I mean, I'd take your money for free.
Well, no man.
I can't believe how easy you guys get rattled. SMT is to that high. Oh, oh man, yeah. Always funny to hear SMT stuff. Don't mind me. Not a fan of SMT. Not that I don't understand it. I just don't think it has a place in my analysis, honestly. So
Yeah, I think it's too
sorry.
random. It's too random. Like sometimes it works, sometimes it doesn't. I know certain persons use it in specific ways at specific times, but uh, me too.
I've seen it used across multiple time frame and all that. So regardless of what happens here, right? This is what I can tell you for a fact. Unless this high gets taken, I'm not interested. I am long. Why am I long? What did I say when the market was printing right here at 8:45? I want to buy below the open, right? Didn't get the chance to. Na 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 na. You guys get rattled way too easily. We spent 5, 10, 15, 20, 25, 30 minutes at least saying this short is pointless if we don't get that high. And then we don't get that high and everybody's bearish. Crazy.
It's like a fever, a crowd virus.
Oh man. Let me
That is actually funny.
trim. There we go. I trim because we're at EQ and this is the open price. And it's open for interpretation there. I figured it's going to pop back and then go again, but I don't care. Do the math. 46, actually bet below 46 to 95. Looks like 50 points. There we go. Na, 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 na.
So how about no? What do you think no? Because all no mean I get stuck, I mean, add to my position. Like that closure, that M5 closure beneath there. What do you think about that? Still come here. Let's see what happens. Let's see what happens. Everything, all of my models are saying, yo, I need to be short right now.
That's
Well,
fine.
that's just my models.
That's fine. I am out right here. Whatever this does means zilch. Nada. Did you come out of the EQ, Yusuf? Because I mean, you just have to. You have to. This is distributing. There we go. See? So now this process on an M5 might take a little bit of finesse, but this on an M30, too easy. I want to long again. I feel like this is one of those last M1 of the M5 rally kind of vibe. So it's 9:26 now. At 9:28, we're going to drop to the M1 and see if we get massive M1 candles. I didn't long again, by the way. But if I was going to long again, I don't think I need to draw this, but I'm going to draw it because somebody's going to say they don't understand. Why are you form fitting, Kishane? Why did you pick that random one? And if I have a key level right here, yes, and that key level overlap with a down candle, yes, and that down candle swept liquidity, yes, and then we CSD that down candle, yes, then we come back to it and fail to close below it. I don't think I need to negotiate if I want this to push price up. See, that's how this is how stupid simple my brain works. Conviction, if you want to trade conviction, especially with size and not have spontaneous bowel movements, you have to be able to frame what you want like this. Why am I putting size on? Why would I trade with size and no stop loss, right? If I scroll through my order history for today, click today, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I've taken 16 trades today, and not one of those had a stop loss, and not one of them were losing trades. You made me miss it. Right. 928. Big M1 candles.
Yeah, that last candle stopped me.
I'm not going to say you deserve to be stopped, right? I'm not going to say that. I'm going to say you allowed yourself to be stopped because you chose to trust random candles printing with no context behind them. But then you're going to say, but context was behind it. And then I'm going to say, after 30 minutes of looking at this and saying to ourselves, if this gets a close below and this does not get taken, that's how sellers get stopped out. And then this gets a close below and this is not taken and you sell and get stopped out. I don't have a crystal ball.
You're right.
See, so sometimes, like, guys, I hope you know this is all love. I'm not picking on anybody or anything. This entire month, any call I do this entire month is highlighting two things: how to not overthink and make better decisions. And I think those are the two things: how to not overthink what you want and how to make better decisions. We want shorts here. I'm not guessing if I want shorts here. I want shorts. But what am I going to short? I don't regret closing. I don't regret closing this one bit. Gold is going to make another last attempt to run up. Gold is already way above the hourly open. Isn't it funny how it's all sitting at that FEG? Minimum objective for gold pullback has been met. So we move to looking. Look at M30. See, this is what I love. You can't overthink price action when it looks like this. We want this to happen. This right now is saying it's not, the state of delivery is not on sell side. I'm half afraid of selling now because the state of delivery is not on sell side. We closed above a FEG and its EQ is acting as support. I don't know, man. I don't know. If it sells off again from the open, it's going to miss me. And I'm going to feel some type of way. But if not, I am prepared to short here with whatever it takes. So just relax. I feel like I want to trade gold though. I feel like the run up on gold has way more oomph to it. So I think. Big bullish M5 candles. Show us the way. This also makes it easier, by the way, to just sit and do nothing with Nasdaq. Gold, I clearly want to see this rally. Gold with Nasdaq, just waiting game. Go gold. It's your birthday. I need gold to have big M5 candles because its objective is so far away. Big explosive candles. Well, that was big and explosive. Not without me. Don't do me like that. Don't go. Oh man, I missed it, guys. I missed it.
Yeah, Friday is ass.
Oh God, I missed it. No. Did Trump speak? What just happened? Oh, look at that. Oh God, I missed it. Damn.
Very surprising, but look at the drawing I put in the chat of this video.
One sec. Mm-mm-mm-mm.
New UFO footage.
Say that again?
New UFO footage.
Lies.
Yeah, 2 minutes ago.
You lied.
No.
Oh, 16 separate setups? What are you talking about?
No. The first drawing in your.
No, I'm scrolling. I think I found it. Where did it go?
Very fucked up.
I clicked on it and it popped out. Oh, you sold the short?
No. The first drawing where I expect price to go.
Yeah, mom.
But not now. I wanted my short to go there, but I closed my short in loss. And now the price is running right a pump up from there. I hope you have the real drawing. It's in the chat.
I looked. Am I the only person only seen one chart and it was a short position?
I think it's the first drawing in the chat.
In Zoom or on Discord?
In Zoom. In this video.
It's crazy.
Yo, Kish, look at that. I took that on my live.
Which one?
That last thing that I sent. That one was taken on my live. Look at my stops. Oh my God, man. Oh my God. But a conviction that still, even what you were saying, but I just believe in my thing. You know,
that's fine.
The same thing you're saying is conviction, do it. Is in but right? So it just
bro, like,
damn, 20, it literally hit me by spread. I had a 25-point stop loss and it literally hit 24 and it stopped me out. Crazy.
Bro, look at this. You mean to tell me that this type of UFO driven, I still can't believe that somebody just posted a UFO. That's crazy.
It happens. Believe it or not, it happens. I was expecting it actually.
I'm expecting a short 100% to 4 a.m. low 100%, but not like this. Not like this. My TP was right there and I got slipped. Oh, you were in short, Yusuf? The second one. Okay. I mean, I'm not going to say it's not a good short, especially when it's this much gains. I'm saying the process to get in that short is just not me. Crazy.
No, that was the fuck.
I must say, let me take out this line here. I expected 9 o'clock, 9:30 here. That's why I put a line there. I expected that to be where the sell happened, but I was still expecting them to wick here and then die. That is crazy. Look at gold sitting right at the FVG EQ2 with a big wick below it.
So we have to watch out for CPI news and UFO news now. Damn.
But sometimes speed can be engineered like that to target just a specific liquidity pool, and then if you believe the markets are algorithmic, then you can believe that it wants to take out trapped buyers or trapped sellers with speed sometimes.
That's true.
And that sometimes it can just squeeze itself and then it explodes and then just continues the normal price action.
But what are the chances that every market has resting liquidity at the exact same low? Because did gold already trade through the low? I remember framing a low on gold for 4 a.m. Oh, it swept that. Yeah. That's what we bought. let's scan through. Where's 4 o'clock?
Yeah, kid, I put the drawing again in the chat.
No, it's not. Did you send it? Guys, am I the only person not seeing the chart you sending?
No, I'm not seeing it either.
Okay, because I only old age is catching up to me. I see one chart.
Now you can see.
Yes, I see it loading. There we go. There we go. Oh, you just bought that drop?
Yeah, I bought that. But the
Solid.
first my
That's solid.
that was my first idea for the short. But I was short when you see this. You see the short?
Yeah.
Yeah, and you see the second I bought there, and I closed the short, the second. Then I bought again, and then I bought again.
Valid.
They go to 800. No stop losses here. Big boss.
Following Kish tradition. Them tradition are dangerous, you know.
No,
Those
but this is
dangerous.
still something is wrong. I don't mean, I'm not vilifying the market. This is not FOMO. This is just wrong. This is just wrong. I want to buy to get here. I want to buy the next M5, but seeing this candle, this size, and looking at where we are, good grief. Good grief. Let's look at the M30. Wow. It's a lot of move. From the high to the low, that's a lot of move. That's my trade plan for the day.
Now you have the daily low. The daily low is in.
I object.
Oh, you think 29,300 could be?
One sec, let me see what I can. This is not the low of the day. I'm going to argue. If I'm wrong, I'm wrong. But the fact that we have imbalances here, at that price right there, smallest red bar here, and we dip down into that has to be engineered liquidity, right? Has to be. Look at gold.
Yes, but there is another question. Where we want the weekly to close?
There's.
Very okay.
Yeah, I'm with you on this one, Kish. Like I want to see those wicks get closed up.
Just don't go without me. Come back, Jack. Come back. I can't sell here. I can't logically sell here. I'd much rather play a buy. All right. Wish me luck, guys. I'm buying this, knowing I'm above EQ, knowing all of that, not telling you to, because I know this is risky. Controlling the risk. Just dip into. I want to add positions, but I want to add only if it goes into EQ. It's a small position here, but it's enough to scratch the itch. That wick on my phone looks like from the top of the screen to the bottom of the screen. It's crazy. I don't believe this. I don't believe this is real. So run up and give me what I want.
It's Friday.
I'm in a long no. I don't think that either of them got high enough to say that the high is in, even if the low is in. gold still looks like the better long because gold is sitting at EQ and Nasdaq is sitting below EQ. So I won't add. I'll just let this position run. If we trade above the open of that big down candle, here I'll consider scaling in. UFO. Oh man, imagine learning to trade for, I don't know, 2 years only to get liquidated by news
One
that
candle.
UFO was spotted. That's crazy. Yo, this is rigged. Oh man. Crazy. I want to trade gold, but I think the risk on gold is greater since the gold moves generally carry more oomph or more volatility. I like Nasdaq. I prefer Nasdaq. I feel like I can take a little bit more risk. All right, cool. Good. Now I am, let's say, put it right here. Thanks. Can I get the orange juice? Can I get the orange juice? Sorry, folks. Got my breakfast delivered. I'm looking at that. I don't have enough risk to justify any emotional attachment to it, to be fair, but it just makes sense. Like everything says this is what price should be doing. Not even crazy, crazy, crazy. All right, so watching the open. I don't care about this open anymore. As a matter, well, lies. Let's not be crazy. There is a all right. Give me a sec, guys. Give me a sec. It's 9:45, which means aggressive manipulation is in play. So let's say almighty push and watch them run to this high. Ready? And a 1, and a 2, and a 3. Almighty push. You guys are no fun. Thank you. So you can see the candles. I knew gold was a better long. Why didn't I buy gold? Remember that day when I bought gold and it consolidated at Nasdaq early? Today I buy Nasdaq and it wants to consolidate. $9.48. Give me another big M1. Big M1 that closes above the open. M5 open. Go, 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 go. Who's next? Let's move a couple of these so it's not a bit crowded. Pull the F5 to the left of that. And I don't think I need to keep this on. Just making the charts a little bit ugly. I can take this off too. You guys know I'm already going to be selling. Ah! Knew it. I knew gold was the better long, and I still bought Nasdaq. Good Lord. Look at that. Look at that. Look at that.
By the way, Kishi, the
Mhm.
reason I'm just thinking, is the reason why you think gold would be the better buy because it already took liquidity right there, so it's gonna move through that with speed?
No, this took liquidity too. Remember, this was the liquidity we're looking at as well.
No, I mean like the buy side, that internal range buy side right there. So
No,
yeah, right
I
there.
think so. If we go back to the M30, remember we had Nasdaq's like final liquidity right there. Gold, we had near-term objective. Gold liquidity is all the way up here.
Oh, okay. Oh, I see. I see. I
Yeah.
see now. I see.
So I think gold still has a lot of upside, while Nasdaq did a good enough job. But I still don't think leaving this high right here makes sense.
I mean, Nasdaq's giving you a little push right now still, so yeah.
Yeah, I'm long. I'm long, but I don't have like, oh well, no, this, yeah. I scaled in a little bit. It's good enough for government work. The push is good enough for government work, but I still need to see this explode above the hourly open. We're in distribution, as a matter of fact. So this entire window of time should just distribute higher. And the draw is that come here button. So I'm not even trimming. Yes, there are small positions, so I don't need to micromanage, but it's break even or TP. Once we close above the open, it's break even or TP. Unless that FEG don't like me. I should be fine. I should be fine. Yes, I should be fine. Matter of fact, I should be able to take a little bit more risk if I get a decent retracement. Do I want this to retrace though? Let's think about it. We have our run on liquidity, big down candle. Then we close back through this portion, good. Then we wick down. For all intents and purposes, I shouldn't want to see anything try to get back. So even if a down candle is going to print inside here, I shouldn't want to see that down candle close below this candle's close. So line in the sand. Below that is discount for a buy. Underlying narrative is we need to reach here. Below this blue line is discount for buying. Now let's see.
If this hour is not closing above 40 points above market price, I close my longs. I'm bearish then.
Yo, the M30 candle is massive. Crazy. For Kamara, I'm not bearish. I'm not bullish, right? I'm just bullish for this state of delivery.
If it wants 40 points in 7 minutes, I'm still bullish. But if it doesn't, I don't know. I close my positions.
Fair enough. Let's go. Let us go. Let us go. Let us go. I'm somewhat peaceful because of the size I have on. Not attached, not anything. I like my position here. I have high conviction that this is going to get taken. I have high conviction that if it stays closing above here, we're going to get there. My position is small, so my risk is contained. These are the trades. You sit back, just sit back and relax. If it's a loser, risk is contained. If it's a winner, you learn to trust your setups a little bit more.
Let's start praying.
One big M5 candle. $40 seconds to get back above that blue line, or I'm going to be out of the trade and it won't matter anyway. Rules protect, processes predict. The reason I'm going to close if it stays here is I think it's going to go back down into EQ of that big candle, and I'm not about that life. Even if it's a small position, it's a bad habit to be training. So close all and 3, 2, 1. There we go.
Yeah, this is madness. I know. I'm glad I'm not participating in this.
Yeah.
Because like right now, yeah, it can go. Right now, I want shorts, yes, sir. But what you're saying about it coming to the place where you're saying come here, that is, I feel that is necessary as well. This is necessary. CSD up there, and then we should take lows. But it's just doing it's just doing a lot of moving around right now.
And we as traders should be comfortable with that.
Yeah.
Be comfortable knowing I can't trust a short here with my stop anywhere below that, and that's too wide for my stop. I can't trust being in a long if it's closing below here. Full stop.
Yeah.
So while both of those conditions are met, I can't trust being a buyer and I can't just being a seller. What does that say? What does that say? It says relax.
Sit out. Yeah,
There it is.
sit out.
There it is. So it is 9:56. I'll give this 4 minutes to see where it closes, and then choose to set an alert or a sell limit.
And like really and truly, like I heard some, but like when my psychology on trading really started to shift is when I really started to not try to make money, but try to protect what I have. Like instead of trying to make money, I'm trying to protect. Is this risky to what I have? And once I started to do that and have that mentality, then started to avoid stuff like this completely. Reducing my trade frequency, reducing everything, really, just increasing my profits.
That's good. So for me, it's similar, but maybe it's a little bit of an ego, and I'll tell you why. I believe the repeated occurrences of the things I understand has brought me to a point where I know when to trust something. You get me? I know when to trust that these candles that are going up are not bullish, it's going to turn around. Or these candles that are going down are not bearish, it's going to turn around. Or price is pushing now and it's just going to go. Repeatedly seeing some things make me know what to trust. This, where's the high? Wherever the high of this candle is, the moment I bought and I was above that 50%, I knew that was a risky trade. Full stop. So instead of, what's that word? Justifying being in a bad position, I used that to get out. If it hits it now, like it did, it hits EQ. If afterwards we see the market get back above and close above, it will give me additional confidence that, yeah, good. If it dies right now, it still will give me additional confidence because the open price here, we just rejected and then pushed lower. That's fine. This is short-term change in the state of delivery. What I don't like is if this state of delivery continues, this is where it's likely going to reach for. Do I want to be a buyer here with a stop down here? If I'm crazy, but fortunately I'm not. So I chill. So for me, it's almost 10 o'clock here. If I'm going to continue trading up to noon per se, because it's Friday, you end early on Fridays. I put an alert here and an alert here. Nothing else makes sense. I don't want to trade again inside here because then I'm going to get attached to the idea that it has to move. And if it gets held inside here, that's perfectly understandable. I just feel some type of way that, I faded this and closed it. Yeah. Didn't have to, didn't have to close it. Didn't have to close it, but I wanted to because they were moderately sized. So when it dropped, I got enough. I was thinking of scaling in aggressively when it came back and took the high. So until then, nothing to do. P.S. If you don't hear me talking while price is moving, I'm enjoying my breakfast. I'll give this until 10:20. So 20 more minutes of this. If in 20 minutes we don't get either of those two levels being hit, then sitting here is pointless. Okay? No questions? 9 o'clock open manipulation and what you did based off that. Correct. You figured it out. I was trying to stress that for a long while. At Yusuf. Wondering if I can get away with another gold long. If gold pulls back to about EQ-ish. All right, so these are going to be my plans for the rest of the day. This is how I'm going to end my Friday. If gold pulls back to EQ, I'm going to play along. If NAS, while gold is pulling back, gets that, then I'm going to play. I'm going to play that. I just don't want to participate with NASDAQ here. And I don't want to participate with gold either. So if it rallies, then I'll look for the short later. But as of right now, if it's meant to be, it'll be. Or plot twist, discount is what NASDAQ needs to go higher. And then we flip this. It runs up and then we crash. And then gold is a little bit more animated. And when NASDAQ is only running to here, gold runs to maybe EQ and then that. So I'll adjust gold's expectation to here and then put a red arrow there. So you get an idea as to what I'm looking for. And I'll put this here for NASDAQ. So pretty straightforward. The levels, the delivery I'm expecting, all that. All right, now give me about 2 minutes. Let me enjoy.
Very uncanny price action. On 4 hour, the last higher up close on 4 hour wasn't tested by 1, 2, 3, 4, 5 hour candle. Just below, but not this. It's time for it.
Oh, quick suggestion. If anyone is on the call right now, like I said, if you just join, I'm finishing breakfast while NASDAQ is doing nothing, not worth participating for me. If you would like to share, so the call is not just dead silence, and have some conversation, and that would be cool. Any takers? Everybody shy. Okay, I'll be with you shortly.
I mean, right now I'm looking at Nasdaq as well, looking at Nasdaq long, try and take out those highs.
Yeah, me too.
But it's I just don't like this PA. Like we're just being trapped inside of a range, but you have to just be sitting down and just be patient.
It carries a little higher risk to honestly, but on the bright side, where conviction is concerned, you should know that even if I'm going to take this, I'm going to cut risk. And
Yeah,
for
yeah.
that reason, we could still participate. But I'm on my demo right now along the 1007 candle. That fair value gap, I just don't want to see if it's actually bearish, if it's actually gonna take those highs. I don't need it to go below those M1, that M1 fair value gap. Which you can see, I guess you can see it on the M5 as well. Yeah, that one right there. I don't want it to, I want to just continue rallying to the highs, to be honest.
I
Probably
hope
gonna
there.
take some off of the highs, those highs that's coming up to 10,950 highs.
looks good. I must admit, it looks good.
Please, we have a bullback.
Where?
So,
Okay. Now let's look at the time. Oh, I might play Nasdaq longs in a little bit. Me? I didn't call you.
And I said, I don't want no retracements at all. I feel like retracements are just unnecessary right now.
What if it dips into the FEG?
If it dips into the FPG, that's fine, but it just reduces my my confidence in it, to be honest.
Like that. I like that. No hoping and praying. I want to play Nasdaq as well, but like I said, once this prints and we get this close after, if it's not trying to stay above that line, then it's not worth my time. So, Alex. Are you here, Alex? Not here? Hi? Bart? No, I think Bart probably on duty. Dan should be financial up. Everybody's so shy. Nobody wants to share their charts for a few minutes. You know?
I'm sorry.
Right,
I'm sorry.
gold.
I'm sorry. I'm sorry. I'm not even gonna lie. I'm sorry.
Oh man. No need to be shy. Had a good day. Lord, let me DM you before you go, right? Pretty sure you bought gold. That's what I want to. Where's the chat? Um, Yeah. Bart, I figured you're on duty. I figured all good.
I do have a question though. For those
Sure.
expecting the weekly candle to close bearish, why?
Oh,
Because
sorry. I didn't. Even though I said I wanted the weekend to close bearish, I did not do enough analysis to justify that. So let's do that now.
Peter, I was
We,
in the kitchen. What should we share?
oh, no, I was going to just saying, if you wanted to share your screen for a little bit and kind of share your process, make the conversation a little bit more.
Oh, I did it already.
Yeah, you. No,
I
you.
want,
I didn't call on you. I know you did it already. You did it already.
I want 800. Give me that, and I'm happy.
Okay, so let's look at this real quickly, guys. In all fairness, big picture, we have weekly lows swept twice. Pullback, we died. This is already a pullback for me. Okay? Because it's already a pullback plus internal liquidity was taken. I'm not seeing much else need for upside unless it just needs to touch the order block before it goes. Outside of that, I think it just needs to pop into that high and then get down here. And then from there, it's a matter of can we die? Oops. Can we die at that manipulation open? Right? For gold, we talked about the fact that gold is different because gold has already gotten its manipulation open and we have already swept liquidity. That makes this FEG pivotal. Has to be. It has to be pivotal. If you look at pushes over here, if you look at this, right? If you know a delivery that opens and we go down and then pop up, inefficiency right inside here, no bodies, right? Just down candle. If you use a volume profile, you should get the same thing. Volume profile should show consolidated participation here, then imbalance, and then more participation here. So like,
By the way, Keisha, my bad to interrupt you, but Nasdaq is pumping to the highs right now. So I don't know if you were interested in shorting that.
what I am interested in, now that you're mentioning, is to close these gold positions. Thank you. Okay, what did I miss on Nasdaq? Oh, come here. Finally. And look at that. Right on time. I said it should happen before 10:20. Almost like I know what I'm doing sometimes. Kidding. Okay, a little bit excited. Sorry. But I don't like that. You remember what I said I wanted to buy for Nasdaq? If it closed above here, then look what it did. It just ran. Let me see if M1 would have. Not even on M1. This is
That fair value
engineered
gap
control.
held. Because when I'm looking at it, I'm saying to myself that like you were long there. You were no, I don't know if you were long there, but you were yeah, you were long there. You were long there. But then it
Mhm.
took the low and then it CSD. In my eye, I'm like, yo, it took out everybody who was right and it's gonna blast. That's why I didn't want to see that fair value get held, get traded back into because I'm like, everybody is already out. Like it should just blast.
So,
So,
do you know why I fibbed this range? Do you know why I was stressing the fact that I know that this is a risky trade because I'm above EQ here? No?
nah.
Okay. This entire candle here is accumulation. This entire M5 candle. This entire window of time up to here is distribution. The distribution should be reaching for equities open low, right? So there's a whole lot of drawings here. I'm going to take them all off and then you're going to have to that low right there, this low is holding liquidity. The moment this happens here, outside of a deeper run, like an explosion with FEG breakaway gap type setup through here, there's no reason to go down here at all. Just the liquidity that was sitting at 4 a.m., right? So if these are the only two levels of liquidity right there, this single M5 candle is accumulating. This single M5 candle is accumulating sell side liquidity. Okay, so that means from here down to here is essentially an order book. This is accumulating all liquidity, both buyers and sellers, just pairing orders. If you want to be a buyer, the best price is here. Liquidity should be thin, right? But the best price should be here. The next best price is here. Fair value, average price. No, breakout traders are going to be here. So entertain this idea. The first persons who want to buy are putting buy stops up here. The second persons who want to buy are buying there at EQ. Everybody in here is mad, including myself. But I knew that. I knew that when I said it. These guys are going to sell to these guys. What does that mean? It means when the market gets to that level here, there is no liquidity here because the buyers are selling to these guys. The breakout buyers are going to put stop losses down here. So if the market goes a little bit higher, fails to expand, it's going for sell side liquidity here.
Yeah, that's what I believe too. Like I believe that's what that's what is loading. It's loading.
Cools. So now it's an easy waiting game. Easy. But unfortunately, folks, you're gonna have to participate in that part of the price action without me. Remember the study. The study is to look at this open here and this high and how we printed between now and let's say around about noon, given the fact that we closed below but didn't take. Ignore this week. I don't think it makes sense to put this week in it because this is not normal. All right, so look at this as the true low. Just take that week off. I guess for completeness sake, I will put the fib here. It's probably too much for that call. So this is your FEG through the liquidity pool. If anything weird happens here, it should do this. But that should be your study. But nonetheless, I gotta go take care of some stuff now. I should be back shortly. And I think I have a 1v1 when I get back. But thank you guys for coming out. Hopefully this was entertaining.
It was nice.
And the plan is to do these for the rest of the month. Okay?
Thanks, Kush.
Okay.
All right, guys.
Thank you.
See you later.
Yeah.